Hello, good morning everybody. First I will start by a little advertising campaign. Well, it's not really a campaign. There is a call for papers for a little workshop in Ghent University. It's called the second Ghent-Russia Colloquium, and we will have a conference on the political economy of Russia, possible topics, political economy of natural resources, Russia's regions, development and corruption, election and media freedom, and social norms and values in contemporary Russia. So pretty much all the topics here on the summer school are also part of the conference. So I invite each of you to submit papers. It's going to be in December 11 and 12 at Ghent University. So feel free to submit. You can find this on the website of the Russia platform you see here. If you just type Russia platform and Ghent University, you will find the website, and on the first page you will find the call of papers. In case you would not know Ghent University, which is entirely possible, I can show you the Shanghai rankings. At the moment we are at number 69. Not very well known university, but a very good university. Yeah. Steadily growing, very slowly. It's very Belgian, very modest, no tuition fees, but pretty good quality. After this self-serving advertisement campaign, let's go to what we really want to do today. So I'm going to talk about politics and banking, which is really cool. And politics, actually, in this talk is largely going to be political connections. Of course, the whole topic of politics and banking is broader than political connection. There's a whole literature on whether banks should be government-owned and ownership of banks. I'm not going to talk about that. I'm going to talk largely about political connections. This was kind of interesting because yesterday in Anna's talk, when she did the literature review, I said, oh no, oh my God. So half of my talk she was covering by looking at all the effects of political connections, which is good. So I violated John's norm. I added a whole shitload of other slides, and I will run over the literature review very fast and give you some other topics. So that's why I was working last night, adding some slides to my stuff. But before I do this, let me start with a framework. If we talk about politics and banking, and specifically if we talk about political connections, what we really should think about is something like, there's something like a political market. And in the political markets, what do you have? You have some players who demand policy, some players who supply policy, and there is some policy issue, right? So since you are economists, we're also going to think about political connections and the political market as really a market with a demand, a supply, and some medium of exchange. There's something that is exchanged. So who will be the demanders? I give you some examples. These are always a special interest group, right? So it could be a non-governmental organization, could be some focal firm that wants some special treatment or some special subsidy or a regulation. It could be some other firms. Usually it is a sector. So in many cases it's a sector, a collective of firms that will some kind of a policy. Who will be the suppliers? Well, usually we think of suppliers as elected officials, politicians. In reality, often that's not who the suppliers are. In many cases, the suppliers are actually bureaucrats or regulators. Someone who is not a politician, but has a fixed job. And that's the one who is the target and who has a lot of power. In many cases, it's also courts. You want a favorable ruling. There's a lot of research on this also in Russia, on the effect of course. And what is the medium of exchange? What are we going to pay as a special interest group for the policy we want? We're going to pay in terms of information, then we call it lobbying. We're going to pay in terms of financial support, we also call that lobbying, campaign contributions. It can be sheer corruption. We can pay in votes. I can promise that so if I'm the National Rifle Association, the policy I want is gun-friendly policies, and I'm going to pay President Trump in a promise of votes. And that's a political market. What we're going to talk about is financial institutions as the special interest group. We're going to talk about elected officials as the players on the policy side, and it's going to be direct political connections that are in the middle. That's what we're going to talk about. Well, okay, so I have two types of presentations. One type is this kind of type, and then the next one is a very dry, LaTeX presentation. And you can look at the difference, and both work actually. So I'm going to give you two very different styles on purpose. This is the first time I try this. The whole point of having this LaTeX presentation, it's a signaling game. It's a dreadful program. It takes you ages. You make one mistake and you look for half an hour, what did I forget? But if you do it, it's a signal of quality. I told this to Alexei over lunch yesterday and said, yes, that's how it works. At the seminar, at the conference, if someone is presenting in this kind of dry academic LaTeX style, I may go up and talk to them. If not, it has to be really good. It's like a costly signal of quality. That's the point. It has to be costly. It has to be a bad program, otherwise the signal wouldn't work. But it's really like that. So I will use that style too. So now this is the nice thing. I would say I refer to Anna. She talked about fishermen. She talked about Faccio. She talked about, and there's a whole, so basically political connections are valuable and you see them in the stock price. Okay. Bye-bye. Right. There's other things on the stock price that you can do. So basically, there's a whole literature on other things that create value for firms through political connections other than the stock price. And I just list a few of them. Some of them are self-budget constraints. So Kwaya Amian, for example, in Pakistan, you also talked about them, in fact. They talk about, okay, these government-connected banks, they get more credit from government-owned banks and cheaper credits. And in the long run, there's more bad loans. They don't actually have to repay them always. So there's a kind of soft budget constraint. In China, there's a lot of evidence that well-connected firms in China, IPOs, initial public offerings, are very politically driven, and your connections help you to get on the stock market. That would not be the case in the US, but in China, it's something that matters. There's a recent literature on it gives you more market power. You also talked, in fact, about Jikit, so I'll skip that too. There's a lot more access to bank finance, both actually in China, but in developed market economies too. There's often easier access to debt, not only actually bank debt, but also other debt. You have lower interest rates, and you have less discipline. If you have worse fundamentals, you're not going to be punished by higher debt costs. So normally, if you have worse capital or worse solvability, worse solvency, normally you would be rewarded by lower interest rates. This kind of, and the opposite, if you have a lower capital and worse solvency, you pay higher interest rate. This punishment disappears if you have the right connection. So you can get away with worse fundamentals and still have good interest rates. Skip all that. Sometimes it's measured by better treatment by the government. Of course. If you have good connections, and that brings us to the public procurement thing, you could have access to government contracts. With the right connections, I will get a nice fat contract, and I can build that bridge, or I can supply this thing to HEC. I'm not suggesting this was the case, of course, but public procurement corruption. Sometimes there's a big literature on regulatory oversight. With the right connections, I could get softer rules. For example, on competition policy. For example, environmental policy. So these rules would give me more profit. Softer rules would give me more profit. That's a big thing. There's a whole literature now also on bailout options, especially in the financial sector. We come back to that. With the right connections, if things go wrong, the government may save me. Think about Chrysler, think about Ford in the United States, think about so many companies around the world. For example, coal mines, for example, steel mills, for example, industries with lots of employment but in a bad shape, they tend to get bailouts. Often in a political, well, there's a trade there. The trade is, okay, higher employment, higher support for me as a government, and in exchange you get some subsidies or bailouts. Sometimes this guy pay, so actually, Anna was talking about this too yesterday. There is a return in lower taxes, and you referred to Rijkers et al., actually 3 papers of them. One of the things is you get lower taxes or more loopholes for your sector. So all this stuff happens. You're less likely to get caught if you commit frauds in China. With the right connections, they're not going to catch you and put you in jail. You're less likely to get punished if they catch you anyways. If you are caught, if you have the right connections, they will say, you should never do that again. If you have the wrong connections, you go to jail. So this kind of stuff, connections matter, obviously, right? This is the seminal paper of Faccio, and I also refer to, I just got a table out of the paper just to show, is it pervasive? I would say the data is by now outdated, but you see that there's a peculiar country, Italy, where apparently political connections are pervasive. That's also why a lot of the papers I showed you in the review are from Italian authors on Italy. Not all of them, but many of them. The reason is you have something to study in Italy, right? There's plenty of political connections there. That's probably also the reason why Italy is in a dire state economically. Too many political connections, too little economics. But surprisingly, also in the UK, it's very important. That was something I didn't know, actually. So in the UK, it seems to matter also a lot. Okay, what I will do, and this is what the literature hasn't done very much, surprisingly, is not talk about firms. I will talk about banks. Because banks have really good reasons to have political strategies. Why? I mean, they are very heavily regulated. There's probably not one sector in the economy that is more heavily regulated than banks. Even nuclear energy has less rules than banks. Why is that? Well, there's two reasons. First of all, in banking, information is very asymmetric. So in this kind of case, you often have very heavy regulation to protect customers. But more importantly, it's externalities. And we just lived through this in 2008. Russia lived through it in 1998 and in 1995 and in 2004 and 2008 and in 2014. Banking crisis, right? And they create big externalities for the economy. If your banking sector fails more than any other sector, maybe that's also the reason why nuclear energy is so heavily regulated, it's externalities. If something goes wrong there, many people suffer. So because of that, these banks have really good reasons to be politically active, right? So basically that's one of these cartoons. So you have this recession eating up the US economy, and you have these banks, and there's a regulator sniffing and said, help, help, save me. So that's the typical banking reaction to regulation, right? It's a big deal for banks, but of course the idea is to prevent the recessions. All right. So the first thing that you see in reality, and there's a lot of papers on this lately, is that there's good reasons to have a political strategy at the sector level. So banks as a whole organize themselves and they lobby very strongly. What is that something you could expect? Yes. There is research that shows, okay, who is going to do political strategies? Who is going to try to capture the government? Well, it is in industries that are concentrated, banks are increasingly concentrated, that are heavily regulated, banks are increasingly heavily regulated, and that are oligopolistic. So these are the sectors where you see this phenomenon of government capture by private interests. They will try to do that because they have an interest in doing that. And banks, therefore, are theoretically to be expected to be very heavily involved in political strategies. And that's also, of course, true. There's a whole set of papers today on lobbying, on campaign contributions, on individual payments of banks to politicians. So you see that very clearly. I tell you some stories here. I'm not going to spend too much time on this, but for example, let me just go to the last one. So there's also one of the rules I violate here, the John rule, is I have too much stuff on my slides. But the reason is, of course, to some extent, I'm not trying to convince you. To some extent, I'm also trying to give you information. And you will get the slides, and a lot of stuff on the slides I'm not talking about could still be interesting for you. So I leave this on the slide for you to read later on if this is your topic, and if you're interested. But this last paper of Agrawal, Amromi, and Ben David and Dinch, basically what they essentially say is, okay, so you had in the US, after the crisis, a new law, the Dodd-Frank Act. And the Dodd-Frank Act was going to limit the freedom of the banks in many ways. And what you see, that in those places where the people in the committee in Congress, in those places where they live, the banks postponed the foreclosures. So what are foreclosures? If a bank gives you a mortgage for a house, so mortgage is hypotheekkrediet. If the bank gives you a mortgage for a house and you're not paying back, what happens is what they call foreclosure. And foreclosure is, I'm going to sell your house, right? Now what happened is, you can show at the very local level that in those places where the committee members that are in the committee deciding on this act live, they postponed foreclosures. With, in some cases, more than a year, at a big cost for the banks, a very big cost for the banks, just to make these members of the committee more positive about banks, that they wouldn't see the costs of the banking crisis. No sold houses, no mortgages. So a very clear political strategy of the banking sector as a whole, and very savvy, very locally detailed, so very interesting. So banks do this kind of stuff. So that raises the question, is there something like this? Is there a silent, unobservable exchange for money and rules? Huh? Do we give some money for better rules? Is this going on? Okay. It's actually not a very new insight. There's very old literature on deposit insurance. So deposit insurance, you know, at strachowaniu depozytów, and you know what is going on here. Those countries where there's a lot of bad banks and a lot of lobbying are much more likely to introduce deposit insurance schemes. There's actually an old paper, but it has been proven recently. We have seen that in the US, in most European countries, in Belgium too, and in a coordinated way, and in Russia, typically after crisis, deposit insurance limits go up, but they never go down. And that's very much in line with this idea that it's driven by politics. However, we know it's harmful. We know it's harmful. There's no scientific doubt about the fact that deposit insurance works in terms of there's a greater bank stability in the short run. But there's also no doubt about the fact that for banks, they get cheaper financing, right? There's some kind of more... So what will strachowaniu depozytów, what will deposit insurance do for you? If you're a depositor, you know whatever happens, you will get your money. Maybe with a delay, but you will get your money if it's below the threshold. So you don't care about how good your bank is. Why would you bother? Just go for the bank that pays the highest interest rate. If it's a bad bank, if it's going to fail, it's immaterial because you have been insured. That means that banks with worse fundamentals will get more and cheaper financing. But in the long run, this also leads to more risk-taking. If I as a bank, if my funding becomes insensitive to my fundamentals, I will start to take more risk. The profit will be for me, and the cost will be for the government potentially, because if I fail, it's for the deposit insurance. If it goes well, I get extra profit. So you get more risk-taking, and you see this. If you try to predict banking crisis, you see that the introduction of deposit insurance is a predictor actually for future banking crises. So there is some cost to this kind of policies. We also see this at the level of individual banks, right? Think about the election you had a few years ago. You had the primaries with the Democrats in the US elections between Ms. Clinton and Bernie Sanders. One of the big topics there, people said, or actually Sanders said, Ms. Clinton, she's in the pocket of the banks, and the reason was she received some obscene amount of money for some speeches she gave at Goldman Sachs. So that's a typical thing, right? You invite a politician, you expect to be the next president, you pay them a crazy amount of money for a speech that is probably not very interesting, and the expectation is something will come back in terms of softer rules or implicit forbearance or some bailout. That's the idea. And she got under fire because of that. So that was very interesting. We also have a very big discussion about what we call revolving doors, where you see that people previously employed at banks end up in the government in times of crisis and make the decisions that save the banks. And this is not a story about Turkey or Russia or emerging market economies. It's a story about developed economies. And the two most prime examples probably are Hank Paulson, who was at the US government when he was saving the banks in 2008, but prior to that was Goldman Sachs. And the same as with Draghi. Draghi was at the very top at Goldman Sachs Europe and became the chairman of the ECB, doing the quantitative easing and saving the banks. So there was some kind of issue there. Is this not some kind of political strategy going on from the bank side? You have the idea of amakaduri in Japan. What is amakaduri? Amakaduri, it means descent from heaven. And the idea is people in Japan who work in the Ministry of Finance, which is a very powerful ministry, and doing also the bank supervision. If you're in this Ministry of Finance, at the moment you're close to your pension age. You descend from heaven. Heaven is the ministry in Japan. And you descend to the board of a bank. And you sit at the board of the bank as the chairman, sometimes even as the CEO, and it's very clearly, I mean, the guys who have to supervise you are the guys that used to be your subordinates when you were at the head of the ministry. So there's going to be no real oversight, no real supervision. And that's, of course, why the banking sector in Japan got in so much trouble in the 90s. Because they had this massive system of amakaduri, everybody was connected. There was no real oversight. Because all the people that had to be controlled were the former bosses of the ones that were supposed to control them. So that just doesn't work. You also have it actually in Germany. In Germany, actually you have the German, so Germany is very interesting. It's a very odd banking system. Nobody talks about it, but it's a very odd system. You have, first of all, this huge bank, Deutsche Bank, which is the most unhealthy bank of Europe, and it's revealed in every other stress test. But secondly, you have a mass of very small banks at the local level. Some of them are cooperatives, private banks, but others are state banks, often owned by the county government. Which also means that in the board, the government rules, makes decisions. Elected politicians do the banking, and it's like this in every single county. And you see that it matters. There's literature that shows that it matters for political cycles, it matters for bailouts, it matters for buying local government debt. So there's a lot of politics in banking in Germany. So it's not a story about it happens in bad countries. No, it happens in all countries. So this is Paulson, speaking to the committee, yeah, we have to do TARP, we have to do TARP, we have to save the banks, we have to spend a few hundreds of billions to save the banks. Okay, so why would banks expect to get? Well, there is some papers, one of these papers is mine actually also, that show that if you have political connections, the government will deposit more money with you. In Russia actually have a name for this, polnomochnie banki. And these are the banks that actually get the government deposits. So that's a very cheap and stable source of funding, and that helps these banks, of course. So that's something you can get from having connections. Political capital will help you to deal with the regulators, and often not with the regulators, but the supervisors. How is banking actually working? You have a set of rules, but then you have nadzor, you have supervision. You have people coming to the bank on site and saying, this is wrong, you have to do this and this and this and this. And that's just a bureaucrat. With the right connections, this bureaucrat will be nice to you. He will not dare to say anything because he knows he will be restricted. So that's what connections will buy you. There's some regulatory forbearance, so the rules are not enforced. This is actually a pretty cool story. So we wrote this paper in Journal of Comparative Economics ages ago, and Russia used to have a bank standards norm on insider lending. And insider lending is a bank lending to its own shareholders or its own owners. And what we observed in this paper that there was no link at all between violating the norm and losing your license, ever. So the norm was completely not enforced. So on paper, the system was really well. No insider lending. In practice, there was no enforcement. So we pointed that out. We sent that to the Central Bank of Russia, to the embassy, to the newspaper. So we sent it out. And the next thing that happened, the next month actually, that was very funny. Instead of starting to enforce the norm, they abandoned the norm. So the norm disappeared. The norm doesn't exist anymore. But so at least they pretended to be, they stopped pretending. But so this is stuff that happens. We have a paper in Journal of Financial Stability on Turkey also that shows if you put, so what could you do as a bank? What is a possible strategy? A possible strategy is, I'm in trouble, but I will nominate as the chairman or the CEO a guy that used to be in parliament. Would that work? Would that create for me, so how could it work? It could work in the sense that people know these guys, my depositors and my borrowers know this guy, he was a national politician. And if I put him on the top of the bank, CEO or the board, and I make advertisements about it, maybe people will believe I'm safer. And implicit expectations about bailouts, essentially. And that's exactly what we find. You find that, so you follow this bank. At the moment they put this politician, you see that deposits arrive at the bank and deposits become cheaper, a lot cheaper. So people start to trust the bank more. At the moment the politician leaves, the effect disappears. And if the politician, if the party the politician belonged to when he was in politics is currently in power, the effect is 3 times as large. So it's clearly a fact of a connection to someone in power. That means people say, okay, this bank, many banks fail, but this bank's not going to fail because it's politically protected. So this kind of works. There's a whole lot of papers out, very recent papers, looking into this. I'm not going to go over each and every one of them, but all of them are very good. And they all look into detail into this, what do banks gain by having political strategies. So it's a very active field the last years. And of course because of the crisis. Now, interesting thing is, and forget about all the text, I leave that for you to read later on. But what I want to talk about here is all the things we have been saying here are essentially the helping hand hypothesis. We are assuming here banks are capturing the government. We're assuming here, until now, that's all I said, companies and banks have political strategies because they want something from the politics. However, that's not the only possibility. There's a very strong possibility of the opposite. A grabbing hand. Maybe the politician wants something from the bank. And what I'm going to look into is also the grabbing hand, not only the helping hand hypothesis. In that sense, that's adding to what you said. Most of the stuff you were explaining was about the helping hand, was about firms enjoying something from the political connection. But actually, there's also the reverse way, where the politicians enjoy something from the political connection too. This is the last thing I want to show about the Turkish paper. So basically what I show here, before I show the next thing, this timing is so we have banks, we follow the banks over time, it's a dynamic panel, and this time here is the moment the politician leaves the bank. So this is the period when the politician was in the bank, and the average period is 3 to 4 years. So this is more or less the period they arrive at the bank, they are in the bank, and then they leave the bank. And what you see, and this is the dotted line, is government deposits. And the solid line is private deposits. And this is the zero line here. So basically what you see is that at the moment the politician enters in the bank, deposits go up, both private deposits, but especially government deposits. I mean, this is very high, 50% growth. I mean, this is crazy. So the politician comes, the money starts to flow in. But the interesting thing is, at the moment the politician leaves, the money gushes out, and especially the government money really flows out very steeply. So the thing is, the politician comes in the bank, and all his connections, the ministries, the government departments bring the money there, but at the moment the guy leaves, all the money leaves too. So for a bank, it's also a very risky strategy. Because if you have the political connection, you have to make sure you can keep it. Because if they get angry with you and they're not happy anymore and they leave, it could mean very serious instability for you funding base as a bank. So it's a risky strategy. You have a question?
But do you control him?
Yes. Yeah.
Because you show us the moment where a politician leaves.
Yes.
But we don't see where.
Yes. So this is not a regression, but a summary stat in a way.
But maybe he's ready to leave, and he tries to help the bank just.
Yes. So in the regressions we do, we also have local projections at some point where you show the effect over 1 year, 2 year, 3 year, 4 years of entry and of leaving. So actually in the regression we look at the point of entry and we see that effect and how long it is there, and we also of course control for selection. The biggest problem here is selection. If you look at the effect of political connections, as I said, of course who will demand a politician? Usually a bank in trouble. And the interesting thing is even controlling for the fact that banks in trouble ask politicians, it's still true that you have this effect. But okay, let's forget about this. I'm also gonna skip this because I want to talk about some of my own stuff. This is about what happens in the United States. If you're working on banking, you should definitely read these papers. It's about TARP, this is the Troubled Asset Relief Program. It's the program that the US used to save their banks. We talk about billions of dollars here. No, we talk about hundreds of billions of dollars here. And what you see is that it was very heavily linked to politics. How much you get, what you get it, when you get it, all that stuff was linked to political connections. So forget about this. What I want to talk about is the grabbing hand. After this, I will present some of my own research. All the research I will present here that is of myself has started at the summer school. So I will present 3 or 4 papers, we shall see, and all these papers have started here. So that's why I do this on purpose, to show you, hey guys, this can lead to something. You have to take this seriously. These papers can evolve and become something good. I mean, if my stuff is good, of course. You talked about this paper, actually, at the very end. And it's the only paper that is actually about the grabbing hands that you talked about. And what is this paper, basically? What do they see? Well, you have these énarques, they call them. Les énarques. These are people from the elite schools. The Polytechnique et les énarques. And they are in certain companies. And what you see, if you have this elite guy, a politically connected guy in a company, what is going on? Before the elections, these guys are firing less people and hiring more people and closing less plants. The idea is clear. You want to pacify the voters, you want to keep everybody happy so that the incumbent can win the elections. And this is especially true if the place where you are is politically contested. If there is a contender, if you may lose, then you see a very strong effect. So this is a clear example of the grabbing hand. It's the politician who wins something to the political connection. This is not about banks, but it's a connection to firms. But this is kind of cool. So it's about re-election possibilities. There's in banking a very big, great paper about Dinç, a Turkish guy. He's a very nice guy. And what he basically found out is this is true across the board. If you take a cross-country panel around the world and you compare government banks to private banks, you see that before elections, the government banks compared to the private banks start to lend more. And it reverses after the elections. So there's a political cycle in banking where the government banks are used by the politicians to increase lending before the election. Why? To increase employment, to make people happy, to improve the re-election possibilities, which is reversed after the election. It's more true in emerging market economies than in developed economies, but it's also there, the effect for developed economies. It's also there. So that was he was the first guy looking at it. It's not so long ago. So 20 years ago, people said, no, banking is efficient, and they only look at politics was no issue in banking. And now people start to understand, hey, wait a second, it is a big issue in banking. There's a very recent paper of Engelmeyer and Stowasser in the GIA, the Journal of European Economic Association. And they do it at Germany. And they use the story I just was talking about. Within every German state and even county, you have cooperative private banks and you have state banks with a politician on board. And the interesting thing is, in Germany, elections are staggered. So it's not one date where you have all the local elections. It's staggered in time. So you can use the election time, which is varying, it's varying. And what I show is exactly the thing we would expect. These, compared to the cooperatives, the private banks, the political connected banks, the state savings banks, they lend more before elections, especially if the election is contested. And the interesting thing is, they also document the welfare cost. After the election, it turns out that this surge in lending before the election of the government-linked banks leads to more bad loans later on. They're less likely to be paid back. So this is a very clear indication that also in developed market economies, there's something like political cycles of banking. What we will do is we will also apply it to Russia later on. The first thing I will do, and now I'm starting with my own stuff. Now it's getting to be fun for me because at least I can talk about something I did, not about something Someone else did. So we have a paper in Journal of Development Economics, which is about banking history in Russia. Basically, what we wanted to do is something very different of what we came out with. Remember what Ruben was talking about yesterday? He had something, a control variable, and turned out to be the main variable and the instrument. We had something like this, actually. So what we wanted to do was a very simple thing. We said, okay, there's a big literature on finance and growth. It's fine, and some of you actually work on this stuff. Is finance leading to more growth? The problem is endogeneity. Is it growth leading to more banks? Is it more banks leading to more growth? Which one is it? And we thought, but we have something great. In Russia, we had this natural experiment. There was the Soviet Union. The Soviet Union had banks, 5 of them. You had Promsterbank, Жилсоцbank, Agropромbank, Vneshtorbank, and Sberbank. And 4 of these exploded and privatized spontaneously in the 90s, before Russia became independent. So in the late 80s till 91, many of these banks, most of you probably don't know, but these 7 banks, well, 4 of them exploded. Vneshtorbank still exists, but many of the local branches became independent, and the 3 others disappeared. Promsterbank is not anymore. Agropромbank became SBS Agro, went bankrupt, but many of the local branches still exist under different names. They have very private names. They look like private banks. And there's so many of them. Today, still more than 100 are alive. Many were merged and some disappeared. And so the question we had is, okay, you have this exogenous source of banking. We show this banking capacity is not linked to economic growth in the 90s, because it was for Soviet purposes. And then we basically asked the question, is it the case that those regions which have more of these banks, just by chance, have indeed more lending and more growth? So we have an quasi-exogenous source of banking. Does that lead to more lending and more growth? And we said, yes, we're gonna break this thing, right? And then it didn't work. It didn't work. And then we started to ask ourselves, what is going on? And so we had to go back to the data, to the archives, paperwork, trying to find out of these banks, these new banks, are they politically connected? So I will show you what we find. I'm not going to show you any, so we have a lot of regressions and tables and blah, but what I advise each of one to do, if you want to convince people, it always makes sense also to show the data itself, show scatter plots. A regression could be one outlier, or if you want to convince people there's actually something going on, also show at least a presentation, show some scatter plots. So what is this? So we have a region of every dot is a region, a Russian region. And this is the increase in lending, per capita lending, in 2002 to 2006. You could call it the golden era of the Putin age, when everything was fine and the economy was running ahead and everybody was happy and there was still free media and all that stuff. And this is the number of Spetsbanks you have, so the Soviet banking capacity, you could say. And what you see clearly, there seems to be a positive correlation, right? So the question is there indeed more lending if you have more Spetsbanks? It seems to be yes. We showed this with regressions, it's very robust with a whole ton of controls, but forget about these controls. The simplest thing to do is, let's do the following. You have all these regions, let's split the group in 2. Let's call them the high Spetsbank regions and the low Spetsbank regions. How? Take the median. So you have the Spetsbank density, how many Spetsbank you have a distribution, cut it down the median, you have the low guys and the high guys. And then for these 2 groups, you're going to show the lending growth over time. This is what you get. So it seems to be that indeed the red line is the high Spetsbank region. The dotted blue line is the low Spetsbank regions. It seems to be that over time, lending increases indeed spectacularly more in the high Spetsbank regions. So we said, yes, you see, you have this exogenous source of finance and it leads to more lending, and now we're going to show it leads to more growth, and we're going to have AR paper. We have finally solved the causality thing, finance and growth. Well, no. This is the growth data, income growth. What? If anything, it's negative. If you have more Spetsbanks, you have more lending, but actually you have less growth. No, it's not there. Or maybe it's no effect. Actually, in the regression, it's negative, but not significant. So we did the same thing, splitting down the median, and you see, talk about parallel trend assumption, right? This is a complete parallel trend. The income growth is exactly the same. Nope. It's nothing there. It's the same everywhere. But when we drew this graph, we were cursing and shouting at each other. We said, I'm never going to work on Russia again. I threw the thing in the corner. God damn it, all this work, finding this data, Jesus Christ. And then Dan Burke said, yes, Koen, but you have to look at political connections. I said, oh, Dan, what are you talking about? Political connections, this is bullshit. I said, no, you have to go to the archives. I said, okay, I'll do it. So I went to the archives. And what we then show is these Spetsbank guys, all of the directors, well, 75% of the directors used to be already a director in 1990. All of the chief accountants used to be chief accountant of the bank in 1990. And basically what we showed also directly is, so what happened is, these Spetsbanks, the banks privatized, but the connections survived. It's the same people, and often the companies that were privatized are also the same people initially. So what happens is, a bank private, then we start looking who are the owners. And so, for example, you have the local Promstrojbank, whatever, Koes-Bas Promstrojbank. And it turned out that the former clients of Koes-Bas Promstrojbank became the new owners of Promstrojbank. So you have a privatized bank, the owners are the clients of that branch, and it's the same people. So what you get is zombie lending. So this is a lot of work, right? So you have the Spetsbank, the other banks, more than 75% are politically connected. The directors are almost 90% politically connected compared to 28. So this is the difference, the political connections. And then you show with many more tables that this is going on. These Spetsbanks are lending more to state firms, less to new firms, less to persons, and you have this zombie lending. We call it zombie lending. So they basically lend to survive. Which brings me to the second paper. There's an interesting paradox in Russia, how Putin got elected the first time. And what we're going to say is, this is also linked to banking. Which is nothing surprising, right? I just told you the story of Dienst across the world. I showed you the story in Germany. So the question is it also true in Russia? And we say basically, yes. What is the interesting thing? In December '99, Putin got 23, not Putin, Unity, which was a new party, came and actually existed less than 3 months, got 22% in the Duma elections. It actually was not the biggest party. At that moment, the Communists and Atyacht for Russia were comparable in size. And then Yeltsin did his magical speech. I'm stopping this new acting president. He's Putin. So this is the speech picture. So there was a big, for the West at least a big shock. So he did a speech, a New Year's Eve speech, said, yes, I will stop being a president voluntarily, and the new president, acting president, is Mr. Putin, and there will be elections in March 2000, within 3 months. And the interesting thing is, Unity was getting 23% in December '99. Putin wins with a landslide victory, having more than 50% in almost every region in March 2000. 3 months difference, almost 30% difference in votes. What happened? This is a stroke of magic, right? Fantastic. What are the possible explanations? Well, you wonder why, right? I would wonder why. The first explanation is patriotic feelings. And many people have argued it's because of the Chechen war, right? The war in Chechnya. Putin was the prime minister. He launched the second war in Chechnya and he won, in a sense. So maybe, and is that a possible explanation? Yes, because if you look at popularity of Putin, this is just the rankings of Russian polling stations. You see that indeed, with the Chechen war, it was very high. And actually, if you look at the annexation of Crimea, it's very high. So, in fact, the Russian population, at least the people that vote, react positively on patriotic things. So it's a possible explanation. Another one is media control. Some people say, yeah, Putin was elected because he controlled the media. But actually, that's not very true. Yesterday, Ruben talked about his paper on NTV. In that paper, they actually show that that NTV was pretty independent still. And in the first election, in 2000, the first Putin election, NTV was still independent, not captured. So if there was some media control, at least it was a lot less than today. There was some real media competition. So that would be a very bad, it would maybe something you could analyze today, but it would be a very bad explanation for 2000. So I don't believe it's media control. In fact, it was Guzinski, an oligarch who's owning NTV. And it's only later, in 2001, it was taken over, brought under control. After a business struggle, it was brought under government control. And of course, the struggle happened because they were opposing Putin. So I would disregard this. So this is from the paper of Ruben and the co-authors, Petrov and Juraska. And what they have is they have all these triangles are transmitters of NTV. NTV is beamed. It's not through cable, it's beamed. And so you see a big density here and a big density here. And so in these places with big densities, I'm just showing you not the statistics, but the graphs, you see, well, little votes for unity and a lot of votes for the opposition, right? So you see the correlation even visually. So if there's many NTV members, unity gets less and the opposition gets more. And if you do this in regressions, you can show it's very robust, it's there. But, so that means it's a bad explanation. Maybe it was electromanipulation. I don't believe that. There's electromanipulation today, but it wasn't there in 2000. Because in 2000, you had still the communists that had lots of power. And you had an influential candidate, Zhuganov, who almost won against actually Yeltsin in '96. And they had the local organization to control. So I don't think ballot stuffing was an issue at all, or electromanipulation was an issue at all in 2000, or it was very small. Ruben showed you this graph. He was very short about it for all the Russians, but not everybody here in the room is Russian. So let me remind you what this is. This is for all the parties, Dienst voor Russia, the Communists, the Jabloko, which are the old liberals, LDPR, which is the Liberal Democrats, but actually pretty patriotic. And so what you get is all these parties, and you see the turnouts. Yes, so this is the turnout you have by party. And so you have the distributions. And the interesting thing is that there are peaks in turnouts on even numbers in the 2011 election. So there's a peak at 50%, there's a peak at 60, at 65, at 70. So it seems to be that there was some ballot stuffing. They were adding polls to the boxes, and they coordinated. They say, okay, we have to be cautious here. You guys take 70% of the ballot, you guys take 75, you guys take 80, but they forgot the in-between numbers, which gives this very odd thing. And the interesting thing is, you also see with the communists. So apparently the communists also did the ballot stuffing. In the places where they could do it, they also tried to do it. And this is the picture Ruben showed. So Russians actually understood this. And you have this, we don't believe Chirov, which was the head of the election commission. We believe in Gauss, which is actually also strange because it's not necessarily Gaussian, this distribution. But okay, never mind. But I don't believe it's an issue. So we're going to say, is it banking? What we're going to look at is a workplace for mobilization. It's a thing that happens around the world in many countries. In Russia, it's strong from Soviet times, or there's the idea. The idea is that some way of political activity is through the firm. So what happens is, not in Moscow, but in the regions, what happens in many privatized companies is that the manager gives political advice to his workers, and very clear, almost mandatory political advice. This is the guy you should vote for. He is the one supporting us, subsidizing us. So you get some clear indication of the desirable vote. Of course, voting is still anonymous, but you get some way of pressure, actually. And there's a lot of indications, published indications, that it kind of works. So basically, they talk about bonuses. They talk about if you don't get the right outcome, wage cuts. They talk about holidays. All these things really happen in Russia. So basically, there's a paper also of White and Fleclunia on the 2007 elections that show that, okay, this is like interviewing case studies. And they say, okay, a lot of directors made it very clear to all their subordinates who they were expected to vote for. Actually, this does not only happen in Russia, right? There are some papers that some US employers do the same, send a mail to their workers with the suggestion whom to vote for. So this kind of stuff happens in some countries. Okay, so we have a lot of indicative evidence about this. If you have this Karta Narushenia which is a data set on the documented problems with the elections. And if you ask them, where do you get vote intimidation from? It's mainly from the employer, from the firm. So people also admit this, workers admit it. It's not about party activists. So in Belgium, it would be the party activists going from door to door, literally. In election Belgium, politicians go from door to door. They go to every market, shake hands, talk to people, have to vote for me. They send out leaflets. But in Russia, that's not very important, party activists. In Russia, the employer seems to be much more important. This is official data, right? It's available online. So it's a political strategy that is used in Russia. What we're going to say is maybe it's Sberbank. So Russia, Putin became prime minister in mid-99. Because of that, he got control over Sberbank. Maybe what he did is there is the December election. And then he said, okay, I want to have more votes. Let's make Sberbank send loans to regions and to companies, private companies in these regions in exchange for votes. So I will give, so you have to remember, the 98 crisis is just finished. Many of these companies are in trouble. So I will give them a loan, a big loan, but I make it clear that in exchange, I expect the right political behavior. You can never really prove this, right? You can only show a pattern. So you can never prove it. So what you're going to do, you're going to look at the change in votes, regional variation between March 2000 and December 99, and we're going to link it to the change in Sberbank firm loans. We're going to control for Sberbank household loans. We want to ensure it's not some kind of Sberbank regional shock. We want to make sure also we're going to control for private domestic bank loans to these regions. Because we want to make sure it's not a regional pattern. Maybe some regions do better in that period than others, and that's why it's going on. So that's the point, right? If this parameter alpha 1 is positive only in the months, so we have the monthly Sberbank lending over 3 years. And if the correlation is only there just before, like a few months before the election, but in no other periods, that would be very strange. So if you have alpha 1 in the months before the election, positive and significant, but not in other periods, then we say probably there's something going on here. Yes?
Can you remind us about the ownership structure of Sberbank back then? Was it fully controlled by
It's fully controlled by the
government? I mean, when we say government, I mean, there was plenty of institution at stake, but are we talking about CBR?
The largest owner was the CBR, Central Bank of Russia.
And back then, the independence between government and CBR was, let's say, questionable?
To say the least.
Okay, thank you.
I would say they were able to use Sberbank. I would argue that, yes. Yes. I'm going to skip this. We can talk about that in the questions maybe, and just show you the main results. So basically, so how should you think of this? The dependent variable is the regional increase in votes that are favorable for Putin, comparing a Dienstwe and the presidential elections. We also have different ways of doing that, but it's very robust. And then you have, of course, you have regional variation, and you have the change in firm loans, household loans, and private domestic banks. So it's the monthly change in lending across regions. And you control for regional variables. You have many more controls. You also have, in some questions, Sberbank deposits to make sure it's not a regional funding shock or something. And you see it's there the months before the election. So this is actually too close to the election because you need to send the money. By then, sending the money was pretty inefficient. You have the Ratchatnika Soviet Center. It took a month to get the money to a region. Then they still have to do their voter mobilization. So it's happening well ahead of time. So you see there, you do placebo regressions. So basically, this is what you want to see, right? You do placebo regressions, and other periods, nothing there. Before the election, since Putin was in power, there's nothing there. After the elections, in the same periods, when it's significant in '99, it's not there. It's only there just before the election. So this is kind of peculiar, or interesting at least. So basically, we wanted to understand, is this really the pattern we're looking for? If you're right, if it is about voter mobilization, we should not only see that the votes for Putin go up, we should also see turnout goes up. And the increase in turnout from December '99 to March 2000 should also be linked to the increase in Sberbank firm loans, if you're right. Right? So we do the same estimation, but now we just switch the dependent variable for turnout. That's the only change. And then you see, and then if you have this positive alpha 1, you know, hey, there's an effect on turnout, and this is backing up our mechanism. And that's exactly what you find. And if you stretch it further, it's not there. But just in that period, that interesting period when, like 1-2 months before the election, when the time they needed to do the mobilization, you see there's a huge effect. So the lending increase in this period is massively related to the increase in turnout at the regional level, and in no other period. You will have the placebos for the other periods, it's not there. So that's kind of interesting. So then let's start us thinking about the mechanisms. And I'm going to finish in a few slides. Do I have time for questions still? Or are you showing me the time for talking, also time including questions?
Not included.
Without question?
If you are going to finish in 2 minutes, you will have time for questions.
Okay, good. I will. So we present this paper in a few places, and some people said to us, yes, but this is not what happened, you don't understand. So some people got angry, it's impossible, I don't believe this, Russians are not so stupid. And some other people said, of course, it's efficient use of banking. So we got very different reactions. Some Sberbank people we talked to said, of course, this is what happened. Some others said, no, not at all. So people got really angry about it. Some supported, some don't. Some people said, look, this is not what went on. What went on is Putin got elected because in some regions there were governors friendly to him, and they organized the election so that they helped him becoming elected. Now the interesting thing is, before 2005, they were locally elected. They were not appointed. We know this has changed, right? Some of you work on this stuff. We know that after the Beslan, the constitution changed, and since 2005, Putin can nominate the leaders. And we also know that it changed again after 2012 because of the protests. So this thing of it's changing over time. That's normal. That happens in every country. The electoral rules change. But in the period we are studying, the regional leaders were locally elected. So that's nice. There is a data set of Shurkov, a published data set in a paper in Journal of Comparative Economics, where she looks into these leaders, and she basically went to all the CVs of all these people in the early history of independent Russia, and she said some of these governors are appointed, some of these governors are FSB or military, Siloviki, so they go back to the military. And basically, we use this data and try to see whether maybe this makes a difference. That Siloviki matters, of course, is clear. If you look at the share of military in elite groups at the regional level, you see that that it actually increased a lot with the Putin cohorts. And this is also published. There's no secret. Everybody knows this. The dominance of military-connected people in regional elites has increased under Putin. So the question is, in fact, in our data set we have 8%, very close to this. So the question is, did it matter? So what you do is, you do the same regressions. I'm not going to show all the variables. It's the same regression. The only thing you do is you interact Sberbank loans with appointed governor and the interaction. So you have the appointed governors and the interaction. And if this works, you would expect that the Sberbank thing is more if the governor is appointed. There's nothing there. It's still the same 13%. It's a big effect, by the way. It's a big effect. However, this is the appointed governors. If you look at the military, you see, So these two columns are, you do the same in Russian with the change in Sberbank loans, but you interact the Sberbank loans with, is the governor a military? And you see the main effect disappears. And the only thing that is still there is the interaction. So it seems to be that the factory document is only there in those, actually it's only driven by the regions where the governor was connected to the military somehow, which is very interesting. So what is the conclusion? And then I will leave time for questions, right? It doesn't mean, and there's no proof at all, that there is an organized campaign. What we do show is there's a correlation. We can't prove causality. There's a correlation between the increase in Sberbank ruble credits and the increase in popularity of Putin. It's not due to regional growth perspective. We control for that. It's not due to deep drives of Sberbank credits. We control for that. It confirms the literature that there is a political cycle in lending, but better identification. We have monthly variation just before the election, not annual like most people have. It indicates that indeed a political strategy for banks could work. Interesting and particularly very topical for Russia is political connections seem to matter a lot, with the Siloviki in particular. There's no evidence that there was central organization. What is equally possible is that the Siloviki saw it as a possibility. So imagine yourself a Siloviki. That's fine. You're well educated. You have a background in the military. You happen to be elected the governor of a region. And all at once there's a presidential election, and Putin is one of the candidates. You will see that as an opportunity. This is the guy that will support us. This is the guy that will help us. This is the guy that will restore the strength of Russia. So maybe the Siloviki, who are of course organized among themselves, rallied behind Putin because he was a window of opportunity. He was a candidate they wanted to support. And that's, we have nothing to say about whether it was centrally organized by the administration itself or whether the Siloviki themselves rallied behind the candidates. That would make equal sense. So it's a pattern of correlation that is very much in line with political cycles of lending, but you cannot say anything about the actual driving force. All right, questions please. Bye-bye.
Koen, thanks a lot for this presentation. That's really interesting. You said, it is indeed, I made it.
Okay, spasibo.
You said in the beginning that if you want to convince people, show it on a scatter plot.
Yes.
So this is a regional level.
Yes. Yes,
yes.
I should do that.
Two maps. One map that showed the increase in the share of votes for Putin between December and March, and the other map showing where the governors belong to the Siloviki group.
Yes.
Just to see what regions drive your results.
Yeah. So you want a scatter plot with maybe like red crosses or some signal for the
just tell us
Siloviki.
what regions drive your results.
Yeah. I actually don't know by heart. That's a very good question. I should do that. Yes. I should follow your and my own advice about showing a scatter plot. This is unpublished yet, and that's probably why. You haven't convinced people
I
yet.
suspect that some regional cluster, maybe the North Caucasus,
Yes.
maybe the South, and then drive the results.
Actually, the moment I looked, I saw indeed the South. It's not going to be North Caucasus because, so if you look at, you have only 58 regions for which you have all the control variables. And the ones that drop out are usually in Gush Etzion, Chechen, because they don't have all the variables. So when we looked, I don't have the schedule, but I looked at it, and it's mostly in the southern belt, actually, yes. That seems to be driving the results, yes. Spasiba za вопрос.
Can you come back on the first regression results? Not this one.
This one.
There
No,
we go.
this is the placebo
this
test.
one.
This is the real.
The one before, actually.
The next one?
The one
This is
that
the
has
first-
defense employment, yes.
Defense employment. Oh, wait. That's not the first. The defense. Oh, wait. You want the
Yeah, you were on it. You were right on it.
this one or
Nope. The one, it's negative sign. Oh, okay.
this one?
There you go.
Yeah. Mhm.
It's surprising how defense employment is significantly
Yes.
negatively correlated
Yes.
to turnout.
To increase in turnout.
To the increase in turnout, sorry. That's what I meant.
So this, first of all, it's a control. We are not trying to make any interpretation, but what we are assuming is that defense employment could for some reason be linked to Putin's election. Because if there's more defense employment, these are often monogards, they are captured companies. There you don't even need Sberbank credits. You can just tell the people, vote for the right guy. And that's what we see here, actually. So in high defense employment regions, the increase in votes for Putin is not driven by an increase in turnout. They were already voting for the right candidates.
Yes, before that.
Yes,
Okay.
yes.
Thank you for the
Actually,
clarification.
we have the same thing. We have a regression I don't show here in the last version, where we also look at monogards. And you see in monogards, it doesn't work. And the reason is in monogards, you don't need to give any carrot. They already have to obey. They're already obedient. They are completely dependent on government subsidies. So these guys are already mobilized by definition. So that they don't need this channel for monogards. So for monogards, it doesn't work. All right. Other questions? So actually, just to be clear, this is not very unsuspected. And it's not very special. This is something many countries would do if they could. It does make Russia special in a way. But the special about this is that we have monthly variation. That's very cool. We don't have that in other countries. Daar waar je Richter.
And did you find some evident case studies about the agreements between banks and firms about the loans and elections?
Yes. We are looking into it. It's very hard to find. So basically, what Victor is asking, show me the anecdotal evidence. Show me the storyline. Can you say me in this? So we have a few small stories actually about banks doing this very clearly, but not in this spirit. I mean, you have to remember this is very, very long ago, and it's very hard to find in this spirit real evidence. So we find some stories about Sberbank later on in the next election doing this kind of stuff. So cutting credits to regions that didn't do well, increasing credit to companies often that did well, but we haven't found it yet for the spirit. So it's also an invitation to every one of you, if everyone knows a story or an anecdote in this spirit that is in line with the story here. So we have some anecdotes of people, but it's not, so we need something that is published somewhere. We cannot say, this guy told me it's true and this guy told me it's not true. That's useless. So we believe our own channel, but we have no published stories to back it up at the moment. We would love to have them though. So if you have one of these stories, please be my guest. Any other questions? Break.